Welcome to another exciting time. Apologies for being away for a while. I had a few things I needed to take care of that were very personal and very demanding, and that's why I was not around. Okay, today we'll be talking on technical analysis, risk management, and maybe a few things that can help us as trader. I for one, believe that one of the things that makes anyone profitable is understanding the basics. If you understand the basics, you only just improve on what is already on ground. Now, this is on the daily time frame. If I were to trade this market starting from Monday, the first thing I want to do, I want to see how market has been playing out, and then we see that GBP had been on a bearish move. This is where we had price. This is where we had price taking up liquidity to come down, right? Okay, we had that. We had I think we had something like let me put the weak rejections so that we'll be able to see everything. Divergence and convergence. I'll be also showing you all of those things. Please stick with me. Alright, now if you look at this, you see that price actually changed from here. We had a convergence from here. Alright, so basically what convergence does is you have you have a price like this. The price happens, and then you have price like this. So at this point, this is one point of convergence. We also have another one where price happens like this, and then goes down. So this is another form of convergence. You understand? So it's not only that way. This one, we also have the one that comes from down. All right, so convergence kind of gives us a confirmation that price will fall. Divergence gives us a confirmation that price will buy, and that's to my own understanding. So we had the convergence around here. So I'm just gonna name it CO. This is on the daily time frame, please remember. So that's why we had this massive fall that happened here. You understand? And then after a while, we had a change of character. Yes, we had a change of character where price stopped and then broke. Now this is where we had a change of character. I'm looking at change of character around this point. We had a break of structure here, price came and then went back up. So change of character. So we had a break of structure around here too. This is a break of structure. I'm calling it a break of structure because it's retested the previous zone before going up. So this is a change of structure. Yeah, a break of structure rather. Alright, so if you look at it, you see that price has actually been playing an upward trend, like a bullish trend. We have the lower high and then higher low. Just that, and then we have lower high, higher low. Gets so this is what price has actually been playing out. This whole thing here is the same thing around here. You get so your ability to be able to find out what trend is playing out will give you a focus as to what we're looking for. Although most sometimes we trade the pullbacks, you understand, which is not bad, but you must in trading the pullbacks you must be able to know where your demand and supply is, so that you don't serve as the liquidity. Okay, all right. I hope you can hear me. So okay, it is not a live session. All right. So once I do this, the next thing I want to do is I want to mark out liquidity point. We had liquidity around here. Right. So I call this liquidity point, and then see this one here. We had liquidity here. Like I thought, set of people. The liquidity is basically, let's say for example, my buyers are buying, they look for sellers, and we're at the point where they exchange, and we have a drop. This point here, it's called liquidity. This point here, the market is driven by liquidity, or you have sellers looking for buyers, and then buyers take over. That point is called liquidity. This point here, sorry, this point here rather, it's called liquidity. Do you understand? All right, good. So all of these will be applying them to our technical analysis. I basically trade supply and demand, and I love price action. You may be trading SMC or any other, be top down analysis. Uh, Whichever one we are all trading, at the end of the day, let's all be profitable. So do whatever fits your personality, so that it's going to be you versus you. Do you understand? We have those who are swing traders, we have those who are day traders. Can you imagine those who swing this GBP USD from the daily time frame down to this point, how profitable they will be. You can also imagine those who were able to catch the buy, catch the sell, catch the buy, catch the sell. Yes, that. So just do what fits your personality. All right. So we've marked this basically on the higher time frame, which is our daily time frame. We want to go to our D. So remember, this is the high that was created this week. This high, yeah. So we're gonna give it another color so that we'll know there's a previous week high. There's this high. I think there's a high that was created, rather, is it this week or no? I think November. Remember this high, I think it has not been filled. So we've had this rejection. So we can have it with excuse me, we can have it to another color, red. Alright, so we'll go to on the 4 hours time frame. Please, I'll be teaching a lot of things today. Hang around. Alright, so we'll go on the 4 hours time frame. You see that from what you mark, you're already having a beautiful chart that can give you a guide. Alright, good. Now, if I look at this, basically, I will see that the market is showing me different zone. I can mark here. As my first zone. Where price came and tapped, then we had the breakout structure around here. Price came, and then we're also having a breakup structure around here. In the sense that price was flowing and then got it, we were expected to come down, but during retest and then went back up. So we had a breakup structure around here also. Breakup structure, continuation of trend. And then price got to the side. So we can call this zone around here our first zone. We have here our second zone. We have here our third zone. All right. So for every time price will go to a new zone, there's a breakup structure. So looking at this, basically, what will be at the back of my mind if I want to take a trade will be to observe if these highs have been taken, and also to observe what I call two things that I always put at the back of my mind. Let me show you. Is that I will always look for whether there's what's called a double bottom or equal low, because that gives me a sign that price is going to reverse. Yes, because there's liquidity that has not been taken. Yes, liquidity has not been taken. So I always look out for that when you are dealing with liquidity. Now, liquidity is taken when you have a chart like this, and then a neck region is created, and then price sweep this before going up. So we have liquidity taken already. If that is, in case you don't know about that, then we have another one where you have price creating the equal high. Rather, we have the equal high. We have price giving you an equal high, and then no liquidity was taken. So most often it tells you that price will get to a particular demand zone and also come to take this liquidity here. You get? So whatever we'll be doing today, we'll be observing if we'll find an equal high or maybe an equal low, and then we'll be asking ourselves, well, what's the secondary demand, secondary supply? This is why I call them secondary and demand. So it's something that was created at in between. Now, if you look at this, please pardon me. Sorry, I'm a bit stressed. Alright. If you look at this, I can call this one of my demand zone. Understand? I also have here price broke here, so here became another demand zone. Although price did not come and touch it, then we have another demand zone yet. So the first thing that won't come to our mind will be, will price take this high before dropping? or would there be a pullback downward? Now, I'm looking at this as an equal low. Let me take out the what's it called, the weak rejection. It's okay. It's not. I'm still looking at it like an equal low, something that. So I'm looking at considering this, that there's possibility price could take out this high, or there's possibility that price will come down here and sweep this liquidity before going out. Now, if the price coming down, I think price will want to target this point before maybe furthering up. That's if it has to go and clear this liquidity. Are you getting me now? Marking out your key level is very important. Check where price gives you a very visible turning point. If you see this, you see that price had understand, looks like it. And then if we go to the 1 hour time frame, we'll be able to see more there. All right, so see why I was considering that. So since I believe, I'm in the belief of whenever there's an equal low, price has tendency of taking out that liquidity that was not taken, then this could likely happen. Remember, we deal on probability. And then if you on, let's put on the weak rejection. Let's put on the weak rejection. We could see that that price here has taken out this liquidity. Let me show you. She marked this weak rejection as here. You see that price actually went above it, so before coming down. So I think once that could happen would be price might want to push up to this point before going down, or completely push down to this point. Remember, we're dealing with demand, so this is a demand level, so price is also at a supply level. So what does supply do? Supply compels the market to sell, demand compels the market to buy. Please take note, I'm teaching the basis of technical analysis for those of us that are professional. All right, but this is how simple I trade. So we have price, this is your demand level, so price will always be compelled to buy from the demand level. If it gets to the supply level, it will be compelled to sell. Do you understand? So this is how demand and supply works. All right, another thing I want to teach us is this. I want us to understand that when marking out your position, you look out for possibility of break of structure. So if you are looking at this and saying, okay, price will come and sit on this before going, also check below whether there is possibility of price also taking out this place. See this place here. Now this place here. Check. Alright, then one thing I want to introduce us to is also applying indicators. I have some favorite indicators I use. The smart money concept indicator. I use moving average, convergence and divergence. I use the EMA to have good confirmation. So for this one, I want to use the smart money concept to check and see whether price might also be considering this zone here. So look at it. Just allow it boot. All right, good. So perfect. So price is also still considering here, and then we have price also looking at this point here, where we have equal low. You're saying, right? So I don't use it until I'm done with my analysis. It helps you better, because if you use it before you're done with your analysis, you might not know. It might be giving you values or details of what has happened before now, but if you look at this, you see that we had equal low here. You have a change of character around here and the rest. So this kind of gives me a confirmation that okay, there's possibility that price will also want to come and take this zone here. You understand? On Friday, I tweeted that price is yet to complete a cycle. Although I didn't take the trade because I was not too sure whether price GBP USD was going to buy. I think it was today when I opened my chart, I saw that it bought so massively. I was angry with myself. All right, okay, you can't catch everything in the market. So this also helped me to know that okay, if this price will fall, remember what I was saying. I said always ask yourself, if price gets to a particular demand, so is there possibility of it breaking towards another demand level? So that's just it. So I'm expecting that if price gets here, price should break. Why? Because there are liquidities that have not been taken. Now price can come and tap here before going out. Price can come and tap here, come towards this place and tap this zone, then take out this liquidity that is down here. So this is just few things that I think can help us. Now be flexible. If you come on a Monday morning and price decide to start falling, the first thing you want to do is ask yourself, where will be my entry? You understand? Me, I told you I'll be expecting price to either maybe come up a bit before. Why am I expecting to come up? Maybe take out this liquidity. You understand? Before going down, or price could just create an equal high here and fall. Now, but whichever way, the first thing I want to do is I want to know where to take my entry. Do you understand? Now, if you look at this point here, see there's another liquidity point here. Price going and there's a major candle formed, a bearish candle formed. So I can mark this side like this. Are you getting me? I can mark this side as my entry. I say, okay, if price is not going to go up, then I could take a trade from here. Understand? Now, if price doesn't come here, the next place I will be considering will be basically the weak rejections. So this place here, price will come here, and then if there's a bounce off, I will take a trade. Why? Because this is also another secondary demand. If this is a supply, this is a secondary demand. So it takes, remember, price will always react when it gets to any demand or supply zone. So if price comes here, you will see it react. Let me show you something. See, I want to let's go behind. Let's see whether we can see some things. Let's see whether we can see some things. All right. Now, this is a demand level. This is a demand level. Now I want you to see something. You will see that price. This is a supply level. Let's mark the supply level. I want you to see something. It's actually important we see it. Now we see that price got to a supply level, reacted, not necessarily reacting back to demand. I'm just telling you that they will see a reaction, a big push. Got here. When it got to demand level, just a reaction. Now you may be saying, it didn't get to supply. There's a supply level here. See this mark here, supply level here. That's why it reacted to this demand level. When it got here, what did it do? It reacted to this place. When it got to this place, even though you see it tapped here and then reacted before there was a break of structure. Do you get? And then it came back. So what I'm trying to say is that price will always react at every point. So if I'm taking a trade, take for instance, I'm taking a trade, and then price start rallying down. The first thing I want to check is the secondary demand level. So if that means I'll be very considerate, or I'll be very watchful. If price comes here, there's evidence price will want to do like this before continuing, right? So if I didn't catch the trade from here and the price gets here, I will allow price to retrace. When it retraces, then I will take my trade here. Why am I taking my trade here? See this level here. Are you seeing this level? All these places are very important. So I'm looking at this level here, this equal lows around here, then this accumulation around here. Price could reverse to that side. Then I will take my entry downward. It's not easy as being said, but I'm just telling you a few things that I consider while trading. That there's possibility that if this price will come and I don't catch it from here, if it comes here, price will react because of this supply level. If you watch, price came here, reacted upward, price came here, reacted upward, price came here, reacted upward, price came here, and then we had a break of structure. Now this break of structure did not just happen. No. Let me show you something. In as much as, let me see what I can show you something. I think this thing has happened before. This thing I'm starting to explain. Let's go to the 15-minute time frame. Let's see. Let me mark it first so that you see this thing here. You see this thing it did not just break and continue. There was a retest. Let me show you. Let's go to the 15-minute time frame. Where's that thing that we marked? Okay, good. See. Price came here. I told you there'll be a reaction, right? I came, reacted. There was a reaction. and then price broke. Now the reason why price was able to break massively, remember, equal low. The same thing I was saying about what's it called, this side on the 1 hour time frame, that if price gets here and is retracing, I'm considering this point here, the price will touch before going down. That's if there will be a reversal. But if there will be no reversal, I'll be expecting that this thing will come and then break here. Is that okay? So these are few things that I think will happen. Please excuse me for a minute. Okay, I'm back. Sorry. Okay. All right. So these are a few things I think you can put into consideration. Now, when thinking about structures, patterns that repeat themselves, let me just draw a few that I think can help us. All right. So you have price coming and then creating an equal low. Now, the next thing that will be your attention will be, since it has created an equal low, you'll be looking for the next supply level. That's it. So it's not just creating a pattern and then drops. It's creating you are asking yourself, where will be the next supply? So after creating an equal low, that means it's giving you basically a demand, right? So it simply means that there will also be another demand below. Are you getting me? All right. So if price creates a demand and then you are expecting that liquidity has not been taken yet, the question that should come to your mind should be, where is the next supply? Now look at this. Look at this. Price came and then gave us an equal low. Where's the next supply? So it's not because it created an equal low, just expect it to fall. It will get to a supply level before it falls. You understand? So let me see whether I can find many like that. I'm trying to see if you can see anything like that. I'm not seeing as much as I want, but those are the few things I have to say. Now, I want you to understand, equal low is something you must be sensitive about, please. Not everything that looks like this that is an equal low. Alright, so equal low, both of them are on the same line, possibly very close, you understand? And then think about your supply, think about your demand level. The same thing applies to equal high. Price creates a supply level, right? Think of the next demand that price can come and hit, and then price will take out this liquidity. The reason why there's a reversal is because there's liquidity yet to be taken. Price moves towards another direction based off on liquidity that is being provided. So take note that we have a demand, that's why the price had to reverse, and we had a supply here. Yes, so if price is coming from a supply level, first thing you should ask yourself will be, where is the demand level that price is going to tap into? So if you know where your demand level is, you know where to take profit. Do you get so a lot of us don't know where to take profits. I deal with 30 picks, 40 picks most often. The reason is because my entry level always provide me an opportunity to get to if I'm starting from a demand level, it provides me an opportunity to get supply level, and then I take a trade. I think you can see more of my lectures on my Twitter page. I tweet literally a lot of what I do. If you study it, you'll be able to see a few things I do. All right, I'll be leaving the comment section open. Just type what you want me to teach about, and I will teach about it. But I have a very long video. I couldn't render the video today. I guess I need an app. It's about 1 hour video. We are teaching on the basis of forex trading, pure technical analysis. I'm teaching you how to use indicators. I'm teaching you how to use your line charts. In the sense that this is BTC. I'm looking at a possibility that if BTC doesn't break this convergence here, this BTC. So the liquidation. If BTC doesn't break this convergence, there is a possibility BTC will rally down. Now, if BTC is going to rally down, then points of taking profit will be at this liquidity point. See 1. There's 1 here. All right, good. and then we have another one around here. You get, so price came and sweep liquidity here. So this point that price swept liquidity for going up will also be another area of consideration. If price will break here, where do I need to think again? See another point here. You get, so this is how I'm able to know. So if I take a price coming here, once it reaches that, most often I take profit since I'm not a swing trader, and then I allow for a pullback. If there's going to be a pullback will be to either this quick rejection here. So we pull back to this point, and then price breaks, and then if there will be a pullback, there will also be a pullback to this place where we have accumulations. So these are basically how I trade. So for pullback confirmation, I change my candlestick to a line graph. To check it, you see easy movement, giving you a good confirmation of how market flows. Lastly, always know that market reacts to zones, and then market will always respect what has happened previously. So the reason why I'm able to mark here and say that price might return from here is because of what I've seen behind. I think it's on the 1 hour and the daily time frame. I was able to see where we had liquidity graph or liquidity point. Let me see how I can see this point here. So that's why I'm saying that there's possibility price might want to go up a bit before coming down. So these are a few things that guides my bias. I'll be hoping to read from you guys, and some of you are very good. Please don't come on the comment section to correct a lot of things I'm saying. I will improve. But these are just a few things I think that can help us. Thank you so much. Please do well to like this video and also subscribe. Do well to share. Thank you.